Hey, hi everyone. Welcome to today's webinar. So for today's session, we are going to be doing our breaking news and setups. So if you guys have any requests for any charts, feel free to pop them into the chat. I can still see a bunch of you guys coming in, so we'll give about 1 more minute to let more people join the session before we get started. In the meantime, let me know in the chat if you guys can see me and hear me, and of course see my screen as well. And then, yeah, we'll get started in about 1 more minute. Thanks, everyone. Okay, let's go ahead and get started. Okay, so as per usual, a disclaimer and risk warning. This information is not considered as investment advice or investment recommendation, but instead marketing communication. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. I'm Melanie, and I'll be your speaker for today. I'm an investment analyst at Rocket, who were finalists for Best FX and Equity Research in the years 2019 to 2021. Okay, now let me just pull out. Okay. So we'll start off by going through the economic events for this week. Okay, so I'm using forexfactory.com, but you guys can use whichever economic calendar you prefer. So you can see I have it filtered to focus on the red and orange icons, which are mainly the medium to high impact events. If you click on this yellow icon, this represents the low impact events. And gray is basically any non-economic events, such as bank holidays. You can also filter any event types or any currency types that you're not looking at. You can see there's a lot more events to cover. If we're also looking at the lower impact events, which is why we just prefer to just focus on the medium to higher impact events. Okay, these will have the greatest impact on your charts as well. Okay, so this week on Monday, we had some bank holidays. Switzerland released their CPI month-on-month data, which came out to be lower than forecasted. CPI is basically inflationary data. So you can see it's quite a high impact event. US released their ISM services PMI data. On Tuesday, S&P chairman spoke. And then Canadian IV PMI data was released. On Wednesday, we had the New Zealand employment data, so employment change and unemployment rate, which dropped to 5.1%. UK's construction PMI data was released, and today we have US federal funds rate, which came out to be the same. as forecasted and as previous at 4.5%. We are also waiting on the FOMC statement and press conference from the US. We have the UK BOE monetary policy report, monetary policy summary, official bank rate, which is expected to drop slightly to 4.25%. We also have US unemployment claims expected to drop to 231K. And lastly, tomorrow we are expecting the BOE Gov Bailey to be speaking, Canadian employment data, so employment change and unemployment rate. And lastly, we have US FOMC member Waller speaking as well. Okay, that's all the events for this week. Let me just stop sharing and open my charts. So we'll start off by looking at DXY as per usual, but if you guys have any specific requests, feel free to pop them into the chat. Okay, let me share my screen. So I'm gonna switch my camera off for now. Okay, can you guys hear me? Hi everyone, sorry about that. Just had to restart my computer because my Zoom crashed. Okay, so as I was saying, we're gonna start with DXY, and if you guys have any other requests, feel free to let me know in the chat. Okay, okay, I'm gonna switch my camera off so that hopefully it doesn't crash again. Okay, let's start with DXY. Okay, yeah, I'll go through all those that you requested. Thanks for waiting, by the way. Um, yeah, okay. Let's start with DXY. So I'm gonna start by looking at the weekly time frame first so that we get an idea of the direction that prices are headed towards. Here we see the general trend is pretty bearish. Although recently there has been a slight uptick. Let's look at our daily time frame. Okay, similarly, most of, or rather the overall trend is pretty bearish. Okay, so you can see recently, okay, I'm gonna analyze this on our daily time frame. And I'm gonna start by adding our horizontal levels. So I will add our first resistance up here. Okay, and then this is my first support. Second resistance here and second support. Um, just here. Okay, so this is an overlap level here. Okay, so now I'm going in with my retracement levels. So my 61.8 and the 78.6 both line up. So I'm going to keep those two. Oh, actually, the 61 price has already kind of broken out of that. So I'm not going to keep that. Okay, now I'm going in with a projection. Okay, 78 and 100 both line up. You guys can hear me, right? Just to double check. Okay, great. So for this projection, if you're unfamiliar with Fibonacci projection, I'll just really quickly show you guys the shape that we're looking for. It's basically this kind of a zigzag or like a lightning bolt shape. Okay, and for this method, we're using this trend-based fib extension tool, and we use 61, 78, and 100 for the levels. Okay, here now I'm gonna use a Fibonacci extension, which is basically the Nike tick method. Okay, you can see my 168 and the 127 both line up with my support and yeah, with my two support levels. Okay, so for this method, again, very quickly, if you're unfamiliar, we're just looking for this Nike tick shape. So in this case, it's kind of inverted. So obviously if it's upright, it will just look like that. Here, since it's inverted, it's just like that. Okay, and we're basically projecting where we're expecting prices to maybe reverse off or yeah, or react off. Okay, I'm going in with another projection here just to see. Okay, no, so that's not valid anymore. I'm going in with a smaller retracement just from this swing high to the bottom. Okay, my 50% and that 23.6 both line up. Okay, so I'm expecting prices to continue in this downtrend, because the overall trend is still pretty bearish, although there's been a slight rebound. Of course, this is purely based on technicals. I'm not talking about any fundamentals in this case or any not taking into account any geopolitical events. Um, so with regard to any central bank announcements, tariff announcements, that of course has the possibility to change the trend, okay? But for now, I'm just purely looking at our technicals. So I'm expecting prices to continue to drop, and where we might see this reversal is at this first resistance level here, okay? Because we have an overlap level, we have two swing lows that have lined up in this area, um, and also we have some Fibonacci levels lining up there. So I'm expecting prices, just to draw it out for you guys, to reverse off and continue downwards. Okay, obviously right now it does look like prices are moving upwards, so I do expect it to continue upwards slightly towards this first resistance before heading downwards. But let's go ahead and look at our indicators to see if they support our analysis. Let's look at Ichimoku and MACD. So Ichimoku, you can see, is giving us a pretty bearish signal. We have prices moving below the cloud, which is a bearish signal. MACD is giving us a bullish signal, so that doesn't support our analysis. Now let's look at our Bollinger Bands. Okay, Bollinger Bands aren't really telling us much right now as well, so I'm gonna remove that. Now with our EMA, SMA, and SAR, we can already expect them to be giving us a bullish signal. Reason being, you can see prices, as I mentioned earlier, prices are moving upwards slightly, which is similar to what we discussed earlier, where we're expecting prices to continue towards the first resistance and then react off it. So for now, it's normal for it to give us this bullish signal. Okay. Okay, but I'm not going to use that for now since it's not really giving us a very strong bearish signal. Let's now look at our RSI and stochastic. So with our stochastic, you can see prices moving above that upper line here. So that is basically giving us a signal that prices are currently overbought. Okay, so we can expect that reversal over there. And also, we also have a hidden resistance level here. Okay, so here and also up here. And currently where prices are headed towards. So you can see at this resistance level that I've highlighted here, the horizontal level, once prices hit this level, prices started to drop. Similarly here as well, prices started to drop. And we're seeing that similar pattern happen here. Okay, so that definitely supports our analysis. On the other hand, okay, actually, RSI also gives us a similar pattern, just that it doesn't go all the way back. It stops about somewhere here. Okay, but it's still giving us that bearish pattern here. Okay, so that is for our DXY. We have a request for gold, so I'll look at gold after this. Any questions so far before we move on? Okay, great. Let's continue. Okay, so on gold, it's giving us a pretty bullish signal here. Um, so gold is commonly, not always, but commonly inversely correlated to DXY. So if you compare on the same price scale, you can see prices recently dropping and prices of gold going up. So the pink line chart is our DXY. Okay, in case that wasn't clear. Here as well, you can see a very clear inverse correlation over here. Okay, so with that in mind, let's now analyze our gold together. Yep, so that's why I said oftentimes DXY and gold are inversely correlated simply because they're both seen as safe haven assets and also gold is cheaper to buy if USD is dropping, right? Um, but there are, like you mentioned, sometimes DXY goes up, gold also goes up. So maybe let me pull out DXY and we can see. So this has to do a lot with geopolitical events. Um, yeah, and basically keeping up with your fundamentals in order to spot these trends. So I think most recently you can see from here for quite a relatively short couple of months here. Okay, you can see price of gold going up and price of DXY also going up. Okay, so oftentimes during, and if you look at the timeline actually, let's see. So the time here was September last year and also to November, about, I don't think it was November, I think it's about end of October of last year. So oftentimes we'll see this inverse correlation breaking during major crises. So you can expect, since like I mentioned, they're both seen as safe haven assets, we can see both gold and the dollar rising together. Another time, or rather another possibility can be when there is a change in real interest rates. So gold is sensitive to real interest rates, which is basically your nominal rates minus inflation. So if real rates fall, and of course this is dependent on the US central bank announcements, right? So if real rates fall, even if the dollar is strong, gold can still rise. And of course, monetary policy shifts will affect market expectations as well. Um, like rate hikes or cuts, and these can cause complex moves in both the DXY and our gold as well. Okay, I hope that answers your question. So that's why at the start of our webinars or live analysis, I like to go through the events for the week. So if there are any central bank announcements, any rate hikes, interest rate changes, we're aware of when that will happen. Okay, so let's look at our daily time frame now. I'm gonna add our first resistance up here, which is very close to where price is currently at. I'm also gonna add our first support right at this small swing low there. And then our first, or rather our second resistance, because you can see our first resistance is already at the highest point of reference. So what we're going to do, let me just pull out our Fibonacci levels. Okay, so I'm going to use our Fibonacci levels for our second resistance. So I'm going to place my second resistance at this 78.6% projection. You can also place it at the 68. I just think that 68 is quite close to that first resistance. Um, or you could place it like this as well. Yeah, no, I prefer it like that. Okay. So I'm gonna place my second resistance at that 78.6, and we're gonna keep these two Fibonacci levels. And next, let's see if we have any other Fibonacci levels here. Okay, my 61.8 lines up. Let's do another projection here. Okay. Um, okay, I'm gonna pull out our retracement. You can see that 38 lines up nicely. I'm actually gonna keep the 23 and the 38 because price is currently reacting off of that 23.6. So this is going to be my intermediate support. Okay. Okay, for now I think that's all the levels we have. So let me pull out our indicators. Um, so Ichimoku and MACD are both giving us different signals, right? So Ichimoku price is moving above the cloud, so it is giving us a bullish signal. Whereas MACD you can see is giving us a bearish signal. I'm expecting prices to continue moving upwards despite this recent um drop. So I think similarly to before, I'm expecting it to drop down a bit more before reversing back up. Okay, but let's take a look at our indicators and see what they say. Okay, so um prices are recently moving above the EMA and SMA as well as the SAR. Okay, so this is a bullish signal, so that does support our analysis. Bollinger Bands aren't really telling us much right now, so I'm gonna remove that MACD as well. Okay, let's look at RSI and stochastic. Um, they're not really telling us much right now. Okay, so okay, KIV these two. Okay, so I'm expecting prices to continue downwards, react off of the first support, or maybe even this intermediate support. Honestly, I think it will continue down to the first support. Okay, let me move the first support around here. So I'm expecting it to reverse off and then continue in that uptrend. So I have labeled it first resistance and second resistance. So it's up to you if you want to go in for a partial profit at the first resistance, or you want to wait for price to break above that first resistance for extra upside confirmation. Or you can wait for prices to break out of this support or rather resistance level here. And then go in for a buy to that first resistance. So that's up to you. Okay, so that is for gold. Okay, now let's look at WTI. Okay, we have a question. Is there a correlation between US 100 and DXY? That's a good question. Um, Typically US 100 and DXY don't really consistently show a strong or fixed correlation. But sometimes they do show a mild inverse relationship. If we have time at the end, we can look at US 100 as well. But the reason the for a mild inverse relationship, let's just let's just look at that now. Okay, so we looked at DXY and then I'm going to compare it to US 100. Okay, so there typically isn't really a very strong correlation. Um, but basically, a stronger DXY typically means that there is headwind for US tech stocks. So this can pressure earnings and then in turn it can increase stock prices. There's also um they're also quite sensitive to interest rates. So a stronger DXY would reflect expectations of higher US interest rates. So that can negatively affect growth in tech stocks since there's higher discount rates on future earnings. So those are some reasons why you might see a mild inverse relationship between the DXY and US 100. Um, yeah. Okay, I hope that answers your question on DXY and US 100 correlation. Okay, let me just go back to the WTI request earlier. Okay, Oh, we have another question. How to calculate pivot point? Yeah. I can cover this after this chart. We can look at pivot points after this, okay? Okay, so let me finish going through this first. Is there another request? Natural gas. Okay. So WTI gives us a pretty bearish signal currently. We have prices moving in this descending trend line. Now on our daily time frame, you can also see that descending trend line. Okay. So I'm gonna go in with our support and resistance levels first, as usual. So for my first support, I'm gonna place it right here where price is at. Okay, and then for my first resistance, I'm going to place it here. Okay, so it's in line with other swing lows as well. Okay, now going in with our Fibonacci levels so that we have a level of reference for our second support. Okay, I'll just place our second support here. Okay, because you can see it's in line over here. It's in line with a bunch of swing lows. Okay, now going in with Fibonacci levels once again, I'm starting with a retracement. Okay, my 61.8 lines up. Let's see if there's a projection here. Okay, 61.8 lines up with our second support again. Now we can zoom in and see if there are any other Fibonacci levels. So I'm going in with a retracement here. My 50% lines up with that first resistance. Let's see for projection. Okay, my 100% lines up. The 127 also lines up. So I'm just going to keep those two. Even though the 61.8 lines up, right, with our first resistance, we're not going to use that because if I draw out the shape that I'm looking at here, you can see price has already broken out of this level here. Okay, so it's no longer valid. Here, rather. Whereas here at our 100%, price is still currently testing that first support level, and also our 127 is in line with the second support. Okay. Okay, so I'm just going to keep the 100 and the 127. Okay. Let's zoom in and see if we have any extension levels. Okay, this is no longer valid. Perhaps here, no longer valid as well. Okay, so that's all the levels we have. So I'm expecting prices to continue pushing downwards. Let me just zoom in really quickly. I'm expecting prices to push below that first support. Okay, to continue in this downtrend. Let's check our indicators. Okay, price is moving below the cloud. MACD is giving us a bearish signal as well. So both support our analysis. Let's now look at Bollinger Bands. Okay, you can see they're pushing below that lower band as well, this green line. So that's also giving us a bearish signal. Let's look at EMA, SMA, SAR. Okay, you can see prices moving below all three of those indicators as well. So that also supports our analysis. Okay, lastly, our momentum indicators, RSI and stochastic. Let's see if we have a descending trend line here. Okay, we have a bit of a descending trend line over here. Okay, no, not really. So I'm gonna remove this because it doesn't really tell us much. Stochastic as well. Okay, so since somebody asked about pivot points, I typically don't calculate pivot points. I just use um the indicator here. Okay, so now that we're looking at our daily time frame, the time frame that I'm gonna be looking at will be monthly. Or even quarterly. Okay. And also I like to focus on just the S1, S2, R1, R2, and of course our pivot point. So it's not too messy. Okay. Oh, before you do this, how I like to use pivot points is to basically look for confluence areas of these resistance and support levels. This is just a double check of my resistance and support levels. So if I zoom in really quickly, you can see that my first resistance lines up with this S1. I'm not so concerned that um, my first resistance has to be a first support since it matches up. I'm more concerned that the S2 and the S1, as well as some other levels, will line up together with the level that I've highlighted, so my first resistance here. Just to give another example, maybe this um this area here, for example. Okay, so this can be an intermediate support level. Reason being, we have some Fibonacci levels lining up here. We also have a bunch of S2, S3, S4, S2, S2 lining up here. My second support, you can see it's supported by the S3, S5, S3 previously. So basically, when you have more pivot points that line up with your level, the more accurate or the more useful your resistance and support levels are. You want to avoid having levels that are maybe, somewhere here, where there are very few or no levels lining up at all. Okay, that's how I would use pivot points. If you want the calculation, um, a very basic calculation formula for pivot point is the high plus the low plus the close divided by 3. Actually, let me just pull out the pivot point slides. I think we went through pivot points quite recently, so it'll be quite easy for me to find the slides. There are different pivot points methods as well. So it depends on which method you're talking about. I'm not sure if I have the calculations here. Okay, here. Let me just share my screen. Okay. Can you see my screen? Yeah, okay, should be able to see it now. So the very basic calculation will be something like this. And then you can use the levels as entry and exit points. Um, yeah, but I typically don't bother calculating it. I just use the indicator here like I showed you. Look for confluence between the S4, S2, R1, R2, so on and so forth, and then check to see if your resistance and support levels line up with those areas. I don't really use pivot points that often. I just use it to check for my horizontal levels. Okay, that's about it. Okay, I think we have one last request, natural gas. So we'll look at that now. Mm, okay, so on our weekly time frame, you can see generally quite bullish on our daily time frame as well. So I'm expecting prices to continue in this uptrend here. Okay, so my first support, this is actually quite far from where price is currently at. So I'm gonna add an intermediate support level here. And then my first resistance up here. Um, okay, you know what? I'm gonna place an intermediate resistance here because it's exactly where price is currently at. And then since I'm expecting prices to continue moving upwards, I can place my first support or my stop loss pretty close to price. With stop losses, you want to make sure that there is enough room for prices to move around. Okay, so you can actually place your first support a bit lower, just in case prices reverse off this intermediate support, before moving back up. Okay, so that you don't get stopped out before that reversal. Okay, this is quite straightforward. So I'm going in with a retracement again. The 38 lines up, 58 also lines up, 50, and okay, I'm gonna keep the 50 and the 38. And then now I'm going in with my projection levels. Okay, 61.8 lines up. So with Fibonacci, your levels don't have to line up exactly with your horizontal levels, so resistance or support levels, because we're looking for areas more so than specific levels. Okay, so this is fine. I think that's all the levels we have. I might add a retracement here. Okay, my 38 lines up with that first support. Okay, now I'm going in with some indicators. Again, starting with Ichimoku and MACD. Oh, maybe we can look at pivot as well, since there was a question on that. Okay. Um, so you can see my first resistance this area is quite there's a lot of P's and R2s and R1s that line up in this area. Similar for my first support as well. You can see the P. The pivot point literally lines up with my first support. S1 is quite close, P here as well. R3, R2, so on and so forth. Yeah, so that's fine. Let's look at Ichimoku. We've done that. EMA, SMA, and SA. Okay, prices are moving above all three, so that also supports our analysis. Bollinger Bands, prices are pushing above that upper band, if you can see here. So I'm going to keep that as well. And lastly, for our momentum indicators, RSI stochastic. Okay, you might want to be careful here at our stochastic because this is a hidden resistance. And previously, when prices hit these levels, we saw prices drop. Okay, so that's why I mentioned your first support, you want to make sure that there's enough room for prices to drop slightly before continuing upwards. I still think that prices are going to continue upwards despite this hidden resistance because you can see all of our indicators that we've used so far give us a bullish signal, and it's quite a strong bullish signal as well. But yeah, we might see a bit of reversal in this confluence area here and this intermediate level. Okay. On the other hand, RSI is not really telling us much. It's also moving upwards, so that's fine as well. Okay. Um, yeah, are there any questions on natural gas? No? Okay, if there are no other questions, then that's about all I have for you guys for today. Um, yeah, any questions? No. Okay. Thank you guys so much for joining me today. I hope you guys found this session helpful. Yeah, have a great rest of your week. And yeah, I'll see you guys again next week. Thanks everyone. Bye. This one will be, let me, S1 as in first support or stop loss. Yes. So that there's enough room for price to drop slightly or to reverse a bit. It's just to make sure that you don't get stopped out at this level. So you can put your stop loss just slightly below where we've placed our first support. Okay. Yeah, that's all from me. Have a great rest of your weekend, everyone. Bye. Thanks, guys. I will I'm typically the one who will be doing these webinars every week, so I'll see you guys again most Thursdays. Yeah. Okay, thanks everyone. See you guys.